Hello everyone, welcome to my channel trendprofiles.com. Umakant here. So let me bring to you about the weekly perspective of what happened to the Indian stock markets, Nifty, what sort of an opportunities we had, and how do we go about it. So to start with, we had a kind of a sustained uptick here. So we had a sustained uptick here last week. So which shows that the Indian equity markets are now at a record high. So the Indian equity markets, Nifty and BSE, have recorded a new record high with the intention that the global equity markets are still going to be supported and there is no time to rest, and probably the ones who actually anticipated for some sort of a correction would be disappointed here, because the way this market is built up strangely is that there is not the declines are not going to come handy unless and until there is some sort of really a shaking news or something of that sorts. So this Nifty, as we see, as we speak, is making a new high. But what interestingly happened during the Friday session is that you had a kind of a very candle, a dull candle on Friday with the heavy volumes. So probably what we could have assumed that is that there could have been some sort of a accumulation, or rather a kind of some sort of an attempted sell but could not happen. So but the volumes also show that probably there is some sort of a new interest which is coming up, which is saying that probably if market were to break out of the support, then there is going to be further upside. So let us look at the indices one by one. So starting with the Nifty IT space is again making into an substantial high for the year. It has made a 52-week high so far, and probably it has also made a new high, new lifetime high as well. So when the Nifty is making a new lifetime high, so has the Nifty IT. And most importantly, it is holding above the 50-day SMA. It is holding above the 50-day SMA, 50-day SMA, and trying to make a new high. So, and you also have RSI getting into overbought, but the point is there is still way up higher for this. The momentum still does not have any divergence of sorts, and the Nifty IT index has still chances to go up. Let us look at the Nifty Pharma index a little bit. So Nifty Pharma is something which is again very steady in nature. So probably what to expect out of this is that there could be a tendency to correct, but the point is that this index is quite steady in nature. If you have to look at the kind of rally which has happened, so the index which started from the month of June is appearing to be very steady and offering a very decent buy tip opportunities. So if you have to look at the index RSI, it looks like there is some sort of a profit taking which could happen, but the point is with the index still does not have any divergence, and hence you can see that probably the Nifty Pharma index can do well here. So talking about the Nifty FMCG, Nifty FMCG is again an index which is being very steady in nature, and it's moving above the 50-day moving average. And most importantly, what's happening is that RSI is well supported for its rally here. So it's got a very decent momentum going up, also making higher tops and bottoms. But the point is that some kind of lull is there in momentum, but this is not affecting. So it is just that it has the momentum has just shown that there is a kind of profit taking, and now market is going up with literally no divergences in place. Probably Nifty FMCG also is trying to go higher. And probably if you have to see even the Nifty FMCG is also making a lifetime high along with the Nifty. So this is a very decent broad channel which has formed So you look at this kind of broad channel here, broad channel here. So this literally shows that although there could be, although it has reached the top end of a resistance line, but there is nothing to stop here as well. So this is a kind of an unprecedented level that the market is not likely to rest anywhere and probably try to go higher. So this is about Nifty FMCG. So let us look at the Nifty metals. So Nifty metal index. Metal index is, I think, there is some sort of a pressure which is building up since the time it has started bouncing back in the middle of August. So Nifty metals doesn't seem to be doing that great. Looking at the point that the global metals as such have started to slightly decline. So for that, we'll have to quickly run through copper. So copper spot, if you have to see that, so copper spot is actually going slightly down. It is holding the moving average as well. So looking at the copper, the base metals, even the Nifty metal is appearing to have found some kind of a resistance rally, because again the broader the copper as which is the benchmark for the global metals is also kind of declining. Most importantly, the Nifty metals is also finding a resistance line here along with the moving averages for sure. So this also comes to the point that the momentum is not being supportive for any sort of an uplift. So we'll have to see that the Nifty metals is likely to be weak. So Nifty Bank is again quite an interesting thing to see here. So Nifty Bank, so the way it's getting support along with the Nifty is not that great. So if you have to look at the possibility of this making it to a new high, probably the answer is very tough. Because the point is the correction doesn't seem to be over yet. I mean, it is just that you can also see that there is a kind of rising wedge which is forming here. So there is a rising wedge which is forming on Nifty Bank. This is also trying to struggle beyond to rise above the 50-day moving average, what we have seen. So this is a kind of a rising wedge which is in the making. So even if there could be a slight uptick, because by the virtue of the closing of the previous days, um, global international index, so this Nifty Bank seems to be forming a rising wedge, and it could easily try to target its recent lows of say 49. So this recent low is around, let us say 49 600 types, so 49 600. So Nifty Bank can see a good shorting opportunity here. Nifty Bank seems to be holding a lot of resistance, and this doesn't seem to be going well in any of the this doesn't seem to be going well along with the broader Nifty index. So let us take a little look at the stock specific performances. They were like you had decent performances. Today we had a kind of a decent performance with the financial sector. So Nifty IT we spoke was doing well. Nifty IT we spoke was doing well. So let us take Mahindra. So take Mahindra. Um, Here, what does this trend depict us is that um, probably a five wave is done for the Tech Mahindra. So Tech Mahindra, you have your 1, 2, 3, 4, and 5. So what could have happened here is that there is a fair bit of resistance that can develop for the Tech Mahindra to go beyond a point. So the five wave advances, what we are seeing here is typically a case where this calls for some sort of a profit taking, but the momentum just shows that this existing move still has some legs. But the point is, does this offer a new trading opportunity, but very, very short term? So if you have to buy this stock at this point of time, the answer is that the opportunities are very, very short term in nature. It's just that, so from 1646, maybe it can go as high as 1675, 30 40 for 30 40 rupees higher, only what we have as an opportunity. So Infosys Limited, as we see, as we speak, this also seems to be forming a five wave pattern here. The point is, when you look at the market leaders like the Infosys, it shows that uh, the kind of sell-off what it is likely to see on the five wave advances is still very, very nascent. Or probably along with Tech Mahindra, you can say that Infosys also can be a short-term bet to see short-term rally. TCS, on the other hand, has some challenges with the has some challenges in following an uptrend. So generally, TCS is not seen to be a very great candidate to follow an uptrend, especially because this is also a derivative stock. So it makes all that noise much more. The noise in TCS is much more prevalent when compared to its peers, because the point is that it's subject to a lot of swings. And this is exactly what is happening. So what can happen with the stock is that this is a stock to avoid on the long side, and this probably can see some sort of a weakness first. Even if it went up, it can get sold off, and if it breaks this short-term support of 4460, then you have a fair bit of weakness to expect. So TCS we can avoid for the time being. So there is one more stock which was also trying to uh, make an impact here. It was like Nazara Infotech. So this seems to be a very um, this chart seems to be having a negative divergence to the RSI. So what we should typically do with this kind of a script is that probably just to avoid going long here, so probably you can have an opportunity to short if it went higher, because the broader the 14-day RSI is trying to show that there is a negative divergence, and you got to be very careful in this to anticipate any rally from here. So Nazara Infotech is a short candidate, but something like you can either short now, or if you get slightly higher opportunity also you can short. So let's look at the banking sector. Banking sector, what we have seen is that you have challenges. The broader index as such is trying to say that it is forming kind of rising wedge. So what do we do with the individual stocks? So individual stocks like SDFC have found to rise above say 1670, also a challenge. Rise above say 1700, also a challenge. So this makes a very decent case for the prices to fall, like say at least to 1550. So you have your momentum also, which is slightly lower, and slightly coming down from the overbought region. So this also calls for a kind of a weakness to fall below 1550. So there is one more stock which I was trying to say, that was Indus Ind Bank. So what's happening with this Indus Ind? Um, it did benefit from the short-term moves of the banking index, but the point is whether this will continue to see a kind of traction is where the challenge is, because this stock is trying to make a bear recovery. But the point is that it is not all that convincingly above its resistances, and the potentials for this to find new selling interest is quite high. So this Indus End may have finished its uptrend. The strength for the uptrend, the short-term strength to rally from an oversold position. So what happening is the RSI from the oversold, it has offered an opportunity like this. So its short-term buy is done with. So probably now the the entire focus would of this stock would be to see that it is retesting back into the it could retest back all these levels again 1340 types. It can again retest these levels. So we also saw Nifty Pharma doing quite well. So in this process, we have one stock called as Natco Pharma. Natco Pharma has been doing extremely well, and there is more phased sort of an accumulation here. There is the momentum, which is again quite range bound here. That means that the all the weaknesses are finding a good buying support. So probably this stock should be bought again. So Cipla is something which Cipla again seems to be done a 52-week high, but again trying to find a profit taking. So this clearly is a buy, but the point is at these levels you got to be slightly careful in accumulating the longs.